Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it bursting the bubble because that's exactly what's going on right now. We're going to start off and talk about the ETF dashboard that I walk through with my members every Saturday morning. So I've got this dated for yesterday. The data in here is through September 2nd, Friday, September 2nd. And we're just going to look at the sectors. I have 16 sectors. I know there's the standard 11 S&P sectors, and I have some subsectors in here, like semiconductors are subsector of technology. And then we've got the index ETFs here also. So pretty dramatic deterioration this week. From the previous week actually was pretty bad itself. There was only one sector up and 15 down. This week, not a single sector was positive, and all 16 were in the red. The leader to the downside was semiconductors, down 6.7%. But technology, XLK, was minus 5%. Materials, 4.9%. So pretty dramatic movement down here. Telecom, 4.4%. Here's the year to date. Now, again, this isn't from their peak. This is just from January 1. Energy still the leader to the upside. We have one other sector positive, utilities, and now the leader to the downside is technology. I think last week XLC was the worst performer, but look, we've got 1, 2, 3, 4 sectors that are down 30% or greater. When we look at the index ETFs, the leader, Russell 2000, was the most negative this week, edging out the Qs, which we're going to take a look at today. We're going to look at the Nasdaq Composite and the Qs, and then we're going to look at the VIX, the High Yield Bond Fund, TLT, 10-year yield, and the dollar index. And the picture for the year is the Nasdaq 100 down almost 26%, 25.8% at this point, okay? And the Russell 2000, 19%. Everything else in the high teens, but pretty dramatic movement. Okay, let's take a look at these indices. Okay, we'll start off here with the side-by-side view of the Dow, the S&P, and the Nasdaq Composite. The Dow was down 965 points, the S&P down 133, and the Nasdaq Composite down 511 points. 3 weeks in a row now, hard down. You can see the Dow had this little harami cross pattern, candlestick pattern here. And then it came down, got the follow through. We knitted, came down hard for 2 weeks in a row. The follow through from a reversal candle here, on the S&P 500, and the same thing on the Nasdaq Composite. So right now we're in hard down in all three of these major indices. The real question is, are we getting this type of movement, the April into May type movement, where we had 1, 2, 3, 4, 5, 6, 7 weeks in a row? Or are we going to be a little more choppy as what we had back here in the beginning of the year, January, February, into March? We had 3 down, 2 up, 2 down, 1 up, 2 down. We'll see. Right now, we've got 3 down in a row. All right, let's go take a look at the Nasdaq Composite. Here's that weekly I was just showing you, and here's the daily view. Let's see, we were down 154 points on Friday. So right now, the Elliott Wave picture that I've got, the preferred count that I'm working on is this. And this is just the impulsive move to the downside here. Okay, let me get this lined up correctly. I don't know why that's doing that. There we go. Okay, so right now, impulsive wave 1 down, wave 2 back up, and then we are looking for the first minor wave down, okay? We are looking for the first little 5-wave move to complete minor wave 1 down. Now, the alternate in here that I'll go ahead and mention right now is this. The alternate is that we have a leading diagonal pattern in here, and I'm going to come back to this when we look at the Qs, but we're looking at this as a leading diagonal pattern. It fits in just about everything. I think it hits all the parameters. Wave 3 is greater than wave 1. I have measured it. Wave 4 is greater than wave 2. Zigzag for 2, zigzag for 4. 4 overlaps 1. And now what do we need to have to complete this? We would need 5 to be greater than 3 and end beyond 3. Well, if it's going to be greater than 3, it's easily going to end beyond 3, but it puts it all the way down here below 90.99 on the Nasdaq Composite. Okay, so that's the picture there. Let's take a look at the Qs. Actually, we have the same thing on the Qs in terms of the same pattern, the same labeling in terms of what's going on. Where did we close? 295.17. What I want to do is look and say, okay, where are we within this? When I look at what I call my hourly charts, the 65-minute bars. Okay, why do I use 65 minutes? Because it cuts the day into 6 equal bars. I don't like the standard, what people call hourly. They call it hourly, but it doesn't give them hourly because one of those bars has to be a 30-minute bar. And, I just don't like that. So I try to divide my day into either 65 or 130 or 195. So right now, here's the picture on the 65 bars. Okay, so I think right now we are still trying to subdivide down, complete the third minute wave. And this got messy in here. There's no doubt about it. And I tried many different ways to figure out, is this like a 5-wave move into here? And it just doesn't fit. Okay, so to me, the best take I've got is that we are doing in what we call an irregular correction here for wave 2. It's on the Qs and the Nasdaq, it's a running flat, okay? Because wave C did not come all the way back up and get to the end of wave A or beyond it. Okay, so this is, and when you have this kind of pattern in the second wave, what does this imply? This implies that the third wave is going to be very strong. Why? Because the trend is so strong that we couldn't even come back up and complete, make this more of a regular flat kind of thing. Okay, so the trend is strong, implies a strong third wave down, but we are extended right now. I mean, there's no doubt about it. We are definitely extended. So let me take a quick look at the 30 minutes. So here's the other thing. When we look at the 30 minute, it looks like we have 5 little waves for the first wave. So yeah, what could happen on Tuesday? Again, we're closed on Monday for Labor Day. Yeah, we could have, this is one, we could have some kind of little pattern back, and we've already potentially started that with the last half hour of the day on Friday. We'll see what happens. Okay, but that's the picture right now. That's where we're sitting with the Qs. We'll look at the McClellan Oscillator, and I'll show you how we've stretched the rubber band quite far. There's a lot of volatility going on, but that doesn't mean it can't get a whole heck of a lot worse. All right, that is the Qs. We talked about the Nasdaq Composite. I talked about the alternate count. Let's take a look at the VIX. Okay, let me pull that up. Here we go, and I want to go to this view, and I just want to focus on the daily. So the interesting thing is, look at the volatility that happened on Friday. We came all the way down, and I thought, wow, okay, here we go. We had a moving average cross to the upside, which I've been waiting for. Actually, we were waiting for these 2 consecutive closes above the blue line, the 10-day moving average. Finally got it here. We kept getting these fake outs. Okay, like it was going to make a try, kept failing, and then boom, here we got it. Now we've turned. Looks like like we're on the way up. I wondered, were we going to get this kind of choppiness like we got back in April, but we didn't get it so far. We still may. We'll see. But we came all the way down in here. And at one point, when this thing was up in here on Friday, I thought, wow, here we go. We're going to end up with a nice white body to the candle, and it's going to be a nice reversal candle. But then it backed off with that, the last 30 minutes of the day. So right now, we're still trending up. We'll see where we go, but it looks like, we're heading to the upper end of this range that we've been in. And, if we are in an intermediate wave 3 to the downside, it doesn't really matter whether we're in intermediate wave 3, like back here, which would be strong, this third wave down, or whether we're in this fifth wave, either one implies a whole heck of a lot of downside to come, and that implies a whole lot of volatility movement to the upside. Okay, so it won't surprise me at all if we kind of break above and get above this level, in the mid 30s. So that is the picture there of volatility. I do want to talk about, let's go to the McClellan Oscillator and show you where that's sitting, because I talked about it. Look how stretched we are. We're sitting down here. We are minus 306, 305.74, minus 306. This is the most extended we've gotten to the downside. When you are below minus 150 on the McClellan Oscillator, you're in severely oversold. Okay. This is the most oversold since March of 2020, February, March of 2020. Let's go back there. I can't easily do that. I'm just going to scroll back. Here we go. Now you can see, here's what happened. Okay, so here we are, minus 408. When? February 28th. Minus 379, March 9th. Minus 421, March 12th. And it kept pushing down to the end of March, even though this was bouncing around at somewhat higher levels. So can we chop around and get some extreme activity in here? Absolutely. But right now, we are, the point I just want to make is we are extended, but this is just a reflection of the kind of extreme volatility that is going on. Now, the summation index, what a lot of folks look at, this is hard down. What is the summation index? It is the sum of the McClellan Oscillator, and this is just showing you that the majority of stocks are in a major decline, as we already know, but this is just hard down after this big rally that we had in the middle of the summer, and be watching for this to come down, break the zero line. Okay, so that is where we're sitting with the McClellan Oscillator. I want to take a look at the high yield bond fund, but before I do that, I want to show you something else I came across. Charlie Bolello he's talked about this higher volatility. This guy's really great with a lot of statistics and data. They are crunching the computers big time. The only years with higher volatility in stocks at this point than 2022, after 169 trading days, the 1930s, which of course was the Great Depression followed by World War II, 2002 dot-com crash, 2009 global financial crisis, and 2020 COVID crash. So here we are. Look at the top 10. 7 out of the top 10 are in the 30s. 7 of the top 10 are in the 30s. When did that happen? The 30s was following the last super cycle peak that we had in 1929. And right now we are coming off of the super cycle peak that has just occurred with the peaks that's happened here in all of the major indices, from February into January. November into January is what I meant to say. November into January. The Nasdaq peaked in November, the Dow, the S&P in January. So right now, I think when we look at the long-term wave count, that's where we sit, and I won't be surprised at all if the 2020s turn into something very similar to the 1930s in terms of the volatility and the kind of movement we get. Okay, so this is the VIX. We talked about volatility. Let's take a look at another measure that's basically screaming risk off, and that is the high yield bond fund. HYG is usually a reflection of animal spirits and usually in sync with the market. It's telling you what? That either risk on or risk off. So why is it risk on, risk off? Because when the high yield is going up, they're basically saying they're assuming more risk into what is risky instruments in here reflected by the high yield bond fund, okay? And then when it drops, it basically says people don't want to touch it and are walking away from that. So it's a reflection of risk on and risk off. So right now, HYG is rapidly approaching the June lows, and I won't be surprised at all to see it take the June lows out. And here's a weekly view, and here's a longer term. We're watching this trend line. I do this trend line from the March 2020 lows through the June lows, and we are very, very close here, as you can see on the weekly. But the other thing I want to just point out, if you look at the longer term of this weekly, and this is all the data I've got on this, the interesting thing about this is, okay, we come down, here's the financial crisis. You rally back up, and what if we had, since 2013, nothing but lower highs, lower lows. This did not get up there, but this is a lower low. And then we come down. Yeah, we end up being a zigzag. We come down to lower lows. I mean, this is lower high is what I meant to say. This is actually a lower high. I mean, it's lower. And so right now, if this pattern continues, we will take out the March 2020. Okay, but the first thing we're going to be watching is a break of this trend line. Okay, so I think it's real interesting that, you know, the way this high yield bond fund has reflecting what's really going on here in the market. And right now, it's on the verge of having a pretty significant breakdown. Okay, let's take a look at interest rates real quick, running a little long here. TLT. It's been selling off. TLT was down up 62 cents on Friday, down $3.40 for the week. And I continue to have this wave count. I continue to see this with a little more push to the downside here to complete intermediate wave 5 of primary wave 1, okay, to the downside. This implies, let me just go back to the moving average view, show you the 10-year yield. This implies that this has probably got a little bit more to go to the upside. We've been up, though, 5 weeks in a row. We're sitting at 3.19% on the 10-year yield. So I could see this taking out the highs that occurred in June. And, you know, that would be in sync with what we were just talking about in terms of taking out the June lows. So right now, that's pictured there. And then the last thing we'll talk about is the dollar index. So here's what I'm seeing on the dollar index. I think we have one more wave up to complete primary wave 1. Okay, this is the picture. This is the long-term picture I've got. And I've got this all the way back into the 80s. Okay, and right now, this is the major trend line that it broke out of to the upside in April of this year, okay? And so the real question I've got is intermediate wave 4 done here, or do we have more to go? And here's why I'm wondering about that. I'm seeing the divergence here at the end of wave 3, that's fine, but I'm seeing weakness here also with this push that just happened, which is why over here on the daily, I'm putting an alternate count that says this could be a flat for wave 4. It could be something like this. So, which means a 3-wave A, a 3-wave B, and a 5-wave pullback down over here for C, and then we go, okay? And then we go. That could be the alternate count, but we could also continue to push here. So these are two possible paths. We'll be watching to see how does it play out. But that is my best take on what is happening with the dollar. So we'll leave it at that. Everyone, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. If you feel like more of this information on a daily, regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week, and remember the market's closed on Monday. Enjoy the long weekend.